Good morning, traders. Welcome to Beyond Profile. Today is May 3rd, second trading day of the new month, and clearly yesterday we had some selling pressure for the very first time. Look at that, a red candle, and that came on the heels of a very big gap open in the Globex session Sunday night, and they continued to sell it off all the way through into yesterday, and now you can see pre-market here, we're continuing down. A couple areas of interest for us. First one would be there's two naked daily pointed controls here, 45s and 44s. The logical place for this to come back to would be this red dotted line, which is the prior highs. This would be a change of polarity. So my thought is on this, we'll see how aggressive that the buyers are when we get to this 45 to 38 area. It's going to be a 5 to 6 point range in here, but this should be where we come in and we pivot and look to buy this market. This would be a clean pullback right back to the breakout area, prior resistance now acting as support, and we get the change of polarity. Like I said, you got this 45, 44 area, which we're only 5 points from it right now, S&P to come in there. They may come in a little bit earlier than the 38 level, all right? They may come in there a little bit. So we have to be ready when we get down into that. We would drop down to our smaller time frames during the intraday time frame and look to see whether we have support coming in, demand at the unfair low territory. And if they do, then we can go ahead and we can start to nibble, anywhere in here from the 38s to 44 area. But we'll see the change will occur, intraday on our 3-minute chart. To know whether or not we should go and buy. I wouldn't really necessarily buy this responsively, either one of these levels. The 38 level I would, because this is an area that had been, again, prior highs, and then when we came in here the 1st of April, you can see all the topping tails, and we were dealing with all of that supply, transferring it out, and then when we busted through it, went through like a butter knife through butter. We want to be able to, take advantage of this first pullback. So 45s, 44s, 43.50, two naked pointed controls there, and of course the major one would be the 38s if we could get to that level. Then what I suspect happens at that point is that we bounce, and then we'll see if we make a new higher, or do we put a lower high in and kind of in this move and really see some more selling for the month of May. Here's the point of control for the month of April, which is 1327. That's about 10 points lower than the prior. That's a big area, obviously. There's a lot of volume has gone off. There was a prior stage 3 here where we had continued also, and this market, anywhere in this area could come back easily and then take right back off into new highs. So we'll have to see how aggressive, like I said, when they start stepping into these prior areas of where they had done business before, how aggressive are they? Right? How aggressive are they? The dollar. You can see that we're starting to get, we're going to get a bounce in this, and I'm thinking we go back to the 74.50 area. Here's what it's looking like. This is obviously stage 3. This could be a new stage 3 here too. We don't know yet for sure if we're going to get the bounce that we're looking for. A lot of volume starting though. The euro's kind of somewhat toppy here. Euro will gap down this morning, which will be an island top reversal. They can come back and fill that. But the dollar index here, you can see if we start to get 73, we held the 73 level several days now. We've tried to break down. We held yesterday. We were actually below it. Looked like we were going to fail it, and we got a nice bottoming tail there. And then this morning we're higher again. So we start trading over 73.50s. I think again we can see somewhere back up in the 74, mid 74s. This will be a tough bird to get through up here, 74.50s, and then the next one would be back to 75.50s. Those would be the two areas. But this is starting to find some short-term, at least stability, if you will, in this in the euro. In the dollar, in the euro coming back down off of its highs too. So both of these markets obviously work inverse. You buy one, you short the other one. You can play these, simultaneously side by side. Okay. So markets, we're looking for a corrective measure here the next couple days. All right, we need a pullback. We haven't had one since the last. Actually, it's been 2 weeks. The market's been on a tear, so we want to make sure that we keep our eyes posted on that. The gold happened to really take a sell-off yesterday. This thing dropped as low as 15.16 last night. It was as high as 15.75. A lot of volatility in some of those commodities. Silver was another one, had dropped. I can't remember, from 48s to 42s Sunday night. That's almost equivalent to 1,200 points in the Dow if you were trading the Dow. So some really, really big moves in those commodities. Oil's at about 112.44 this morning, and then the bond market is another market that just doesn't want to stop. Still grinding higher, still going higher. Okay. If you haven't had a chance to come into our room yet, please be sure you sign up for a free trial. We also have classes running now monthly. We also have the new Intro to Value-Based Trading class as a recorded video that you can purchase, and you can watch it at your own leisure and in your own time frame. So be sure that you check out all the new things happening at Beyond Profile, www.beyondprofile.com. Have a great day, everyone.